Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Look at these two beautiful coins, that's for sure. Yeah, I have one of each, at least. I love them. But when it comes to gold, I think if you guys are into collecting them, the 1 ounce gold coins that are the best definitely are the Buffaloes. They are absolutely gorgeous. Anyways, let's get into gold, silver, cryptos, you name it, because in chatting with people, there seems to be a little bit of a mood change. People are feeling bummered about cryptos, gold, and silver. So let's talk about those just a little bit. Before we get started, though, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. Right now is the time to buy gold and silver. The premiums are still ridiculously high, and that is because people support the value of gold and silver. That's why they're still able to sell it as high as they are. But they are definitely a little bit cheaper than they were before, so go ahead and continue to stack. To me, this is just like having gold and silver on sale. When you guys go to buy your precious metals, go check out our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you'll get a free half ounce of silver. Things have been looking really gloomy for cryptos and gold and silver, except for this Ion's up 10,000% today. It's up $3,111.80. I don't know. I've read all kinds of things about it. I don't know what to think about it, and I don't know a whole lot about it. But the fact that it's up 10,493%, it's jumped up $3,111. Well, that's a pretty good jump, and already is in the, what's that, the top 1, 2, 3, 4, 5. It's in the top 6 already. It was down here earlier and continues to climb. Well, this is one of those ones, if you happen to jump on it in the very beginning, well, then you are styling. But if you're trying to jump on it now, I don't think it's a good idea, but it's up to you. Most of the cryptos are in the red. Bitcoin's at $38,644. It is down below the 39,000 level and is expected to get down around 32,000. I don't think that's going to happen. Ethereum's at 2,831. It is below the $3,000 level, but usually doesn't go much further down. Ion, the new kid on the block, is up there at $3,111. The market cap's at $43 billion, just under the USD coin. And if it keeps up at this rate, it will be in the top 5 probably by the end of the day. We'll find out. Getting back to the New World Order coins, Solana is at $94.96. XRP is at 61 cents. So much for going to the moon. My guess is people are waking up to the fact that it is contributing to the central bank digital currency, making that the New World Order coin and part of this great reset by the World Economic Forum. Cardano's at 81 cents. Dogecoin still sitting around 13 cents. Avalanche at $64.95. Polkadot's at $16.43. Shiba at 4022. Crypto.com's at 37 cents and Polygon is at $1.17. So nothing exciting outside of this Ion when it comes to cryptocurrencies. Although Hex, remember the last time when all the other cryptos were running red for some reason, Hex was on a run. It just kept climbing and climbing. It looks like it's right back to doing that same thing all over again. So when everybody else is in the red, Hex seems to be moving up and running. Saitama, for some reason, is in the green. Sitting at 8063, so it went up a little bit. Over the past hour, though, it is down 2.3%. But over the last 24 hours, it is up 7.1%. Over the last 3 days, it is up on average 3.5%. So it seems to be heading in the right direction. We'll see if it maintains that. Over the last 14 days, though, on average, it's a negative 11.1%. Over the last 30 days, it is overall a negative 54.3%. Silver hanging around at $23 level. We know they want to smash this down. This is the silver delivery month. So this is just the comics and the LBMA covering their butt, not to mention manipulating the prices down. The rumor was they wanted to get it down around $11. That's not going to happen since deliveries, I think today was the last day or yesterday was the last day, probably today. So most likely they'll start shooting back up again, the price of silver, and this time it's definitely going to take off. But how nice when you have the ability to manipulate the markets, huh? On the 18th, it was sitting around $26.17. It's more than $3 lower now. You can see silver started to make a run for it this morning, started going back up there, got up there around 23.56, and then they turned around and smacked it down. A 50-cent loss since then. Let's see how long they'll continue to do that. So silver sitting at $23.04. So you can see they did the same thing with gold. Here we go on the 18th. It was up there close to 2,000. It had dropped all the way down to as low as $1,872. It has since gone back up to around 1919. It has dropped $9. They're gonna have a hard time with gold. I really believe that. Don't get me wrong. It's not like they're not capable of doing this, but I'm gonna play something from Ralphie to get your guys' attention, as well as Lynette Zane, that I think you should be aware of. So gold is sitting at $1,911. This is why I say when it comes to precious metals, don't focus on the spot market value, because that's not the true value of gold and silver. People are still paying high premiums on these metals. It's ridiculous. They're 20% right now, 20% premiums. The reason for that is because the support level for gold and silver is there with high premiums. If it wasn't, they wouldn't be charging the premiums. I think it was July of 2020, we saw the gold to silver ratio was ridiculous. It was 124 ounces of silver were equal to 1 ounce of gold. And I said back then, I gave as an example, if you had 10 ounces of gold, you would trade it and get 1,240 ounces of silver for a straight across trade. It was about 6 to 8 weeks after that, we saw the ratio drop down to around, oh my goodness, what was it? 68 to 1. So, about half of where it was. If you took that same 1,240 ounces of silver and traded it for gold, then you ended up with 18 ounces of gold. So you traded 10 and got 18 back. You picked up 8 ounces of gold by doing nothing more than swapping gold for silver and silver for gold. That's why people pay attention to these ratios. Historically, the ratio between gold and silver is 15 to 1. Realistically, it should be more like 7 to 1. But when you see this out of whack, usually what you do is that right now the best thing to invest in is silver. It's the poor man's gold. You invest into it because gold and silver usually get closer together as far as the ratio is concerned. But it's never that gold comes down to silver. It's always silver goes up to gold. So eventually it's going to get back up there. So silver is the right investment. But right now, 82 ounces of silver, almost 83 ounces of silver for 1 ounce of gold. Yeah, the ratio is out of whack. And you can tell by watching the gold in the green and silver in the red. Shout out to Chris Marcus from Arcadia Economics. He's playing this video from Ralphie. Here's what I'm trying to point out. They manipulate these prices down during delivery months. Whenever they sell these short contracts, they're trying to just cover their asses, you guys. As soon as they're done doing this, then they're going to have to let the prices go. You can hear Ralphie in here talk about this here. He's going to let you guys know what the covering is, but I want you to listen to what he's saying about where gold and silver is going.
Now, these 4 rectangles show you the last 4 major declines in the gold price for the last year. So remember, in November 2021, gold hit a high at around 1870, 1880 or so, and there was a big sell-off, right? Huge sell-off from 1880 to it looks to be around 1760 or so.
The sell-off that he's talking about is not actual physical gold. It was paper.
During that sell-off, open interest, the amount of contracts open in the futures market on COMEX, collapsed from 620,000 down to about 500,000. So about 120,000 contracts were covered. That means the bullion banks were able to cover a big chunk of their short positions. This is the same thing.
See, what he's saying is they got short contracts. These are people betting on the price of gold and silver actually being lower. So when they do futures contracts and they're saying that the price is going to be lower in the future, well, if the value of the gold or the silver is higher, then they lose major money. So this is how they use the paper market to manipulate the value of gold and silver. So what ends up happening is they'll just dump a ton of paper gold and a ton of paper silver on the markets to try to drive down the value so it covers the contracts that Ralphie's talking about. You know how he said there's open interest or open contracts? Yeah, you got to cover them. So they drive down the cost so it doesn't cost them an arm and a leg in case people stand for delivery.
During the January-February correction this year in 2022, the gold price went down from about 1850 to about 1760 again, 1770 or so. And again, open interest, the amount of contracts open was able to collapse from about 570,000 to around 500,000 again, over 70,000 contracts. So not as big of a collapse, but still 70,000 contracts is quite a bit. Now, that character has changed since the top we saw after Russia's invasion of Ukraine, when gold matched its high from August 2020 of around 2070 or so. And then there was a huge price collapse from about 2070 to below 1900. So we're talking about a decline of $170, which was stronger, bigger decline than this decline, and certainly bigger than this decline. And what happened to open interest? We were at 645, 650,000 here at the peak. And open interest is still stubbornly high, above 600,000 here. Only about 40,000 contracts were covered during this $170, $180 collapse here, which means the bullion banks were unable to close their short positions. And on the COTs, you'll see
that's bad. You understand that? They were not able to close the contracts. That means they don't have enough physical gold and silver to cover them. This is going to boomerang right around and bite these guys in the ass. It's starting to get where the demand for physical gold and silver is so high that they can't cover the contracts. Talk about the collapse of the comics and the LBMA. That's what's coming on. And then all of a sudden you can see gold and silver really skyrocket.
The net position of the bullion banks is still, I think, above 200,000, comfortably above that, which is very high for the amount of short contracts. And now we're seeing something similar play out since gold was able to hit 2,000 again in mid-April, or on April 15th, I believe. Since then, we've seen a collapse about $130 to lows. I think we're on 1870 today. And where has open interest gone from 580,000 contracts to now about 570? We're back to 570. It's just 566,876. But I looked at the COMEX numbers and we're back to 570,000. So barely 10,000, 20,000 contracts were covered in a $100+ move in gold, which means the bullion banks are stuck. They cannot cover anymore.
Oh, yeah. That's awesome if you hold on to gold and silver. You see, sooner or later, people are going to stand for delivery. They're not going to have the gold and silver. That means they're going to have to buy it from somebody. That's what I'm saying. Don't pay attention to the spot market price. It's manipulated.
And the next rally in gold could bring their short positions up to a record, I would say maybe 300,000 contracts, and they will be in serious trouble. Now, I want to move to silver deliveries. This chart is the chart of silver deliveries, daily silver deliveries since 2005. You'll see I drew a red line over here, this long horizontal red line. These are daily deliveries of contracts delivered, warrants delivered on a daily basis. We see the record here above 10,000. I think it was about 12,000 in one day or something like that. July 2020. That is when COMEX ran out of registered supplies and they had to shuttle over from the JP Morgan vault mostly.
Yep.
Several thousand contracts. I think it was about 20,000 contracts worth from eligible to register. They had to move over in order to satisfy delivery demand. Now, only one time did we get over 10,000 deliveries in a day. That was that time, July 2020. But look where we are now on the CME. How many contracts do we have left over in May silver? And it goes to delivery tonight. And if you're watching us on Friday, it goes into delivery. It went into delivery last night.
So these are already into delivery. Silver is
10,785 contracts left in the May 2022 contracts. That means that they are at least going to go to delivery. That is over 10,000. We could be at a new record this month. We'll see. These numbers tend to change in the last minute, but it's looking good. And it's looking like silver deliveries could hit a new record. And keep in mind, this over here is the total amount of registered silver that is on the COMEX, silver that is tagged for delivery, 83.78 million ounces, which translates to 16,756 contracts. That's what is available, with 10,785 still open. Suppliers are going to get low. We'll see if they have to shuttle any more eligible into registered category.
and that's what we want. You understand that, right? Why? Look at it. So this is what happens when we take a big bong toke. Look at that. Just messing with you, Ralphie. That's what I'm talking about. The paper is starting to run out. They're not able to keep up with the physical demand. So when you see them, they're trying like how to knock these prices down. Why is that? Why does that matter? Well, it helps them cover their short contracts as much as possible. And then it also scares amateurs and speculators, and people give up their gold and silver because they think they're losing money. You're not losing money. You're never going to lose your purchasing power. That's what I'm saying. Hold on to it. And come to find out, Andy Shipman's saying, no, people are not selling, dude. They're not selling. It's not working. They're not able to scare the public no more because they're a lot more educated than they used to be. And in addition to that, more people are collecting and investing into precious metals than ever before. Still lower than 5% of the world's population, but still a lot more people than ever before. But listen to what Lynette Zhang says. And again, you got to pay attention because these are the things that we're looking for. And this is why it is that I ignore this spot market.
Gold and silver kept at home run no counterparty risk, and it's real money. And this is what you need. This is what we all need, because it is indeed the ultimate safe haven asset. So China has a choice. They can either back Russia or they can back the US. So sides are definitely being developed either way. But this is the approach that she says we should take. Number one, we should modernize the approach to trade integration where supply chains are made up of trusted countries. Oh, so if you play the game the way we want you to play it, then you're in, and if you don't, then you're out. And
in other words, either join the New World Order and this globalist agenda, or we'll cut you out and crush your country, except for more and more countries are starting to resist this. Canada is trying to outlaw the central bank digital currency. Love it.
But private capital, meaning you and me, can be better mobilized in a world so awash with savings that interest rates have been dropping for decades. How about the reality that the world is awash in debt and interest rates had to fall to be able to continue to grow even more debt? And what they're really talking about here is the ability to take us into negative rates, because if we see our principal evaporating, we're more likely to go out and spend it. As war complicates the push to contain inflation. I've said this forever, they're between a rock and a hard place, because inflation, now they can't hide it like they could before. It's more obvious for people because it's happening more quickly. When it happens slowly, they can get away with it. That's their price stability. You don't know that it's happening, so you don't change your choices in spending. But when inflation ticks up this rapidly, people notice they aren't as likely to spend. They're having to make choices on putting food on the table or buying a blouse. Guess what's going by the wayside? They're not buying that blouse, obviously. So they've got to raise interest rates. But for the governments, for the central bankers, that growth is all based on debt. Just keep borrowing, just keep borrowing, just keep borrowing. And now the tightening is underway. Now you can see that the tightening is happening, and it's happening globally.
You see what she's talking about? This is a debt base here in the United States. And the United States influence other countries to do the same thing. Become a debt base. The only way citizens, the only way governments can function and have a good economy is as long as you continue to get into debt and as long as you continue to spend your money. This is why the central bank digital currency is coming out with an expiration time on it. They want you spending all the time. The problem with it right now is everybody is investing, they're saving. So they're manipulating the markets any way possible to get you to spend your money. That's another reason why you're seeing the values of cryptos go down. That's another reason why you're seeing the values of gold and silver go down. So that you get scared and take your money out and spend it. This is why they go to 0% interest rates or negative interest rates on your bank account. Because if you leave your money in there, you're losing money. So what you do is you take your money out and you spend it. They want you spending, not saving. And if you don't spend your money, they'll force you to do it. That's what the central bank digital currency does with an expiration date on it.
Leading into, there's not one doubt in my mind. I'm certain that we're already at the beginning phases of the hyperinflation that is going to usher in a complete shift socially, economically, and financially. You better be prepared. And so now, Fed President Bullard came out and says 75 basis point hike could be an option if needed. That's garbage, because even if they raise it a half, which they call huge, 75 basis points would be tremendous. It's only so they can lower them again. This is the new dot plot. Take a look at this. I think this is really interesting and very telling. Okay, so they're going to raise the rates up to about 2.5%. This is what they anticipate. 2.5% for over this year, between now and by 2023. And then they're not going to do anything. They're just going to keep them there for a year, and then they're going to drop them. Well, guess what? Into every crisis up until this point, up until 2008, they have had to lower rates 5.5%, 5.75% in order to stimulate the buying. But now, since inflation has reared its ugly head, well, they don't want to stimulate the buying because that will make the inflation run hotter. Now, can you see the problem? They're damned if they do, and they're damned if they don't.
Exactly. If they stimulate buying, inflation goes higher. But they have to stimulate buying because this is a debt-based. What's the solution, Pimpy? Oh, I'm glad you guys asked. How about they take and they revalue gold and silver? That will help with liquidity and help with Federal Reserve books. Or is it that the United States doesn't want to do that because they actually don't have our gold there? Maybe that's more the reason why they're fussing and fighting the idea of going into the gold standard, because without the American citizens knowing, they've either leased out, rented out, loaned out, or sold all of our gold. And if that's the case, heads should roll. Anyways, that's it for now. You guys hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.